Welcome to PTE's Payroll Tax Reduction Plan, an insurance company-backed tax-advantaged wellness program designed to save you money, increase profits, and improve your corporate valuation. The Payroll Tax Reduction Plan is going to increase your profits from $700 up to $1,000 per employee per month, with zero disruptions to your existing major medical, health, or financial benefit plans. We are supplemental to all your existing plans. Our program is fully automated and integrated with your existing payroll, which means, after the initial setup of your payroll, there is minimal work for both HR and your payroll staff. This is a zero net cost program, now or ever. No net cost to the employer and no net cost to the employee. And you are not going to be the first company to use this payroll tax reduction plan. It is being used by companies of all sizes, ranging from as low as 25 employees to as high as 30,000, and there is no maximum number. There is no limit to the number of employees we can handle. As mentioned in the previous slide, your company will see an increase in profit from $700 to $1,000 per employee per year, net of fees. This will increase your corporate valuation significantly. For every 100 employees, your profits may increase by up to $100,000, and depending upon your multiplier, your company valuation will grow accordingly. $200,000, $500,000, $1 million, even higher. Your employees are now getting an enhanced benefits plan that may also give them additional take-home pay. And again, the plan does not interfere with your existing benefit plans. We are supplemental, fully automated, and being used by industry leaders like Prism HR. The plan is no net cost, no out-of-pocket costs, and it is operated by our third-party administrator who provides full support for your employees through email and an 800 number, in addition to a state-of-the-art phone app. Here is how we achieve a no net cost payroll tax reduction plan. The program is set up using an IRS Section 125 cafeteria plan. Now, many companies are already using a 125 plan for their major medical insurance programs, and that is okay. You are allowed to have more than one IRS Section 125 cafeteria plan, including the one presented today by PTE. We begin with a pre-tax insurance premium deduction, which reduces your employees' taxable income and gives them benefits. The employees participate in the Fixed Indemnity Wellness Program and receive a tax-free claim payment, just like every other fixed indemnity policy in the country that is accepted by insurance carriers. A non-taxable wellness claim payment is made to the employee for their activities. Employers pay less in payroll taxes. Employees see a small increase in take-home pay and additional benefits, all with zero changes to their existing benefits package, at no net cost to either employee or employer. This program and others like it exist because in 2013, Congress came to the conclusion that our healthcare spending was getting out of control, and Medicare billing in the future would be unsustainable, if not brought under control. Their answer? Help Americans stay healthier, longer, through preventative health care and knowledge. Congress needed to give employers incentives to help them help their workforce take definitive steps to lead a healthier and smarter lifestyle. This led to the creation of a fully insured fixed indemnity wellness plan that we refer to in this introduction as the Payroll Tax Reduction Program. This is not a tax gimmick or a fabrication. It is an IRS Section 125 cafeteria plan that Congress designed to promote health and wellness through corporate payroll tax reduction. Now, this is the first of the two most important charts presented today, as it explains how an employer saves money in the Payroll Tax Reduction Program. In this example, we're using $1,560 per month as the pre-tax premium amount. Premium levels are adjusted, so there is never a negative to an employee's paycheck. $1,560 is the maximum premium under this plan. We multiply the premium by 7.65%, which is the standard employer FICA rate, your matching share of Social Security and Medicare taxes on those wages. So, $1,560 times 7.65% is $119.34. That $119.34 is the employer payroll tax savings per month in this example. That is money you no longer send to the IRS because that portion of pay is now treated as a pre-tax insurance premium. From that $119.34, we then subtract the third-party administrative fee, which in this example is $20 per month. Net savings to the employer per month in this case is $99.34. Each month in this example, the company will save $99.34 in FICA payroll taxes on this employee, which, when we multiply by 12, is annual savings of $1,192.08. In summary, the employer always has a net savings, and the employee never has a lower take-home pay than they currently have. Third-party administrative fees are an important consideration when deciding which plan to choose for your company. We currently charge a TPA fee of $20 per employee per month, no matter what the premiums are. Across the industry, a typical third-party administrator fee is often in the range of $35 to $45 per employee per month. Why does that matter? Because every dollar of TPA fee comes straight off your company's savings. If someone is charging $35 instead of $20, that's $15 more per employee per month in TPA fees you are paying. Over a year's time, that is a difference of $180 per employee. Do you want the $180 for your company, or should you pay it to the TPA? That's why TPA fees matter. We have previously discussed the IRS Section 125 elements. Now, let's put them together using an employee earning $4,000 a month. Step 1. A pre-tax premium of $1,560 is taken from the employee's paycheck. Step 2. This deduction pays for the comprehensive package of preventive health and wellness benefits, plus much more, which we will explain later. Step 3. The deduction lowers the employee's taxable income, creating payroll tax savings. The employee's gross pay is $4,000, and after we deduct the premium, their taxable income is lowered to $2,440. Step 4. Employees participate in a fixed indemnity wellness plan, tax-free. Step 5. For participation, employees receive a non-taxable health claim payment in their paycheck, in this case, $1,300. Now, this is the second of our two most important charts presented today. In this example of an employee earning $4,000 a month, we will see the effects of the plan on their paycheck. There are 3 columns across the top of the chart: before tax, after tax, and the difference. This is important to understand that an employee's gross income does not change under the plan. It is $4,000 before and $4,000 after the tax reduction program. When we apply the pre-tax premium, we can see that the taxable income changes significantly for the employee. Taxable income drops from $4,000 to $2,440 when the premium is applied. In our example today, our employee works in a state without income tax, and so their withholding tax shown in the chart reflects this difference of $356, the difference between $820 and $464. Now, in order to meet every IRS code regulation and IRS Chief Counsel advice, our program has an after-tax fixed indemnity wellness premium. In this example, it is $42. This after-tax fixed indemnity premium pays for the wellness component of the plan, and when the wellness claim payment is made to the employee every month for participation in the program, The claim payment, in this case of $1,300 paid to the employee, is tax-free. When you do all the math and look at the take-home pay line of the chart, this employee is taking home an additional $64 in their paycheck. In addition to a small increase in take-home pay, employees receive additional enhanced benefits. They receive protection benefits. They get fixed indemnity coverage for hospitalization, accidents, and critical illness. If someone ends up in the hospital, has an accident, or is diagnosed with cancer, heart attack, or stroke, there are cash benefits paid directly to them to help with out-of-pocket costs and everyday bills. There's also a $10,000 term life insurance policy built into the program, as well as a $10,000 accidental death policy. No medical exam, no underwriting hassle. Even people who might not qualify easily on their own can still have basic life protection for their families. Every plan includes access to 1,100 routinely prescribed acute and chronic medications at no cost that is available to the employee, their spouse, and dependents. They can get common prescriptions like antibiotics, blood pressure meds, diabetes medications at zero cost. That's a huge savings for employees who take regular medications. They also get access to discount programs for dental, vision, and chiropractic care. These aren't insurance plans, they're discount networks, but they can save employees and their family significant money on services that aren't always covered by traditional insurance. And there is concierge-style virtual health from our benefits provider. Previously, we have shown that there are 5 different premium tiers to the program. This slide shows all 5 premium levels and their FICA savings. As previously stated, there is a flat $20 monthly TPA fee. Looking at the monthly employer savings line, you can see exactly what the company net savings per plan tier are. You see they range from a high of $99.34 per month to a low of $53.44. So, looking at the bottom line, your company will save from $1,192 per employee to $641 per month. Not all employees will qualify for the highest level of coverage because not all employees have the same number of deductions, a 401k, alimony, and other deductions. Our computer algorithm will determine which plan each employee qualifies for, making sure that the employee has a positive net take-home pay and place them in the highest available plan. We like to take a little time to talk about telemedicine for the entire family. This is one of the most highly valued benefits that we provide. This is not just a basic urgent care hotline. It's virtual primary care, urgent care, and behavioral health all in one place. It's available to employees, spouses, and their at-home dependents. We treat a wide range of everyday physical issues: eye infections, fevers, headaches, flu, nausea, and a long list of other common conditions. Instead of sitting in a crowded waiting room, you skip the wait and connect with a board-certified physician on your phone, tablet, or desktop computer. You can schedule doctor consultations when it's convenient, middle of the day, after work, nights, or weekends. The service is available 24/7 from anywhere in the United States. When medication is needed, same-day prescriptions can be sent to your preferred pharmacy. You don't have to hunt for a new doctor or drive across town. The doctor handles it, and you pick up the prescription where you already go. 2 big points employees appreciate: no copays and no deductibles under this program. Call our benefits provider before heading to urgent care or the emergency room, and they will advise where you will get the best help and often at the best price. Equally important is the mental and behavioral health component. Employees and families can get help with substance abuse, depression, stress, anxiety, trauma, PTSD, and more. Not all telemedicine programs include this. We do. This telemedicine benefit doesn't replace your current health insurance, it supplements it, making it easier and cheaper for employees to get care. Again, this is a supplemental plan that does not ever replace your existing health plan. This benefit is what Congress must have been thinking when it made wellness a component of the ACA. The idea is simple: catch health issues before they become expensive problems. Employees receive a comprehensive blood test that looks at around 55 critical health biomarkers, a much deeper look at your personal blood than a basic panel. Those biomarkers are run through an AI-powered analysis that was developed with Harvard Medical School and MIT. From the analysis, you get a personalized health report designed to identify risks before symptoms appear. The test is essentially a medical predictor. It says, here are the areas you need to pay attention to, rather than, you already have a major problem. Along with the report, you get a non-prescription action plan to improve your health naturally: nutrition, exercise, sleep, stress management, and other practical steps. Why does this matter? It supports early detection, which can prevent serious health issues down the road. It gives personalized insights, not generic advice. Bottom line, knowledge is power, especially when it comes to your health. The program is designed to be used, and easy access is critical to engagement. All of the benefits can be accessed through a phone app. Telemedicine, wellness tools, the wellness library, it's all right there on your mobile phone, as well as tablet or computer. Order prescriptions, refill medications, talk to a doctor. Do it by phone. Employee calls are typically answered and routed to a medical professional in under a minute, so they are not sitting on hold. Behind the scenes, there's a concierge-style support team. If you need help finding, say, an MRI or a specialist, they can help you figure out who's best and most cost-effective, so you're not navigating the system alone. The app is available on both Apple and Android, and it's designed to be convenient and easy to operate. And if you enable GPS, you can allow it to follow you to the hospital. But if you let them know that you are dealing with a broken hand, they can help you find the nearest urgent care center and save the expense of the hospital. It is important for you to know that this program is fully compliant with all necessary regulatory protection to ensure the program is always state and federally compliant. There are a lot of regulations and laws that touch a program like this, from Department of Labor rules, IRS code regulations, healthcare rules, employment rules. We like to say, we cut payroll taxes, not corners. You will recall that we said the $20 per month TPA fee was important. We spoke about an additional $180 in savings per employee per year. However, when it comes to high-income earners, those employees earning more than $184,500 per year, our competitors that charge a TPA of $35 per month or higher, companies will show a loss of $159 per employee per year, instead of our program's small savings of $21 per year. Now, you can download a copy of today's introduction and return to this page and read it, or have your lawyer, accountant, benefits broker, HR, and anyone else interested in due diligence do it. But suffice it to say, PTE has done its homework and legal research. Bottom line, with PTE, you will have positive savings with your high-income earners and with everyone else that we currently know of offering payroll tax reduction. High earners lose money on their programs. Please call or email PTE with your questions. Our Payroll Tax Reduction Program was created to save companies a significant amount of money, increase profits and corporate valuation, and not create additional work for HR and payroll. We do nearly all the work, with minimal administrative burden on your team. We work directly with your HR and payroll departments to ensure a seamless implementation of the plan. The greatest amount of time your HR team spends on implementation is setting up payroll, whether that is internally or with an outside provider like ADP, Paychex, Insperity, and any other outside payroll service or PEO. Our TPA enrollment team will educate your employees on their new benefits and how the plan will result in a net increase in take-home pay. We do ask that HR send the initial email to your employees, but we provide a template that you are free to tweak as you see fit. HR isn't stuck answering everyone's questions, as our TPA does provide email and 800 number support for your employees. Our staff handles adding new employees, billing issues, questions, and claims inquiries from employees via a toll-free number. Our payroll software interfaces with all the major payroll programs. In addition, we generate a payroll report every pay period. We strive for hassle-free implementation, enrollment, administration, and payroll reporting. Technically, we have a 6-step approach to enrolling new companies into the Payroll Tax Reduction Plan. But there is also a simple 3-step approach. Provide PTE a copy of your last payroll. Please blank out the employee names and Social Security numbers, and we will provide you a detailed savings census broken down by each employee's savings for the company. You'll determine if the savings for the company and the benefits for the employees are worth taking the next step. We'll then send you a master service agreement, and the payroll integration will begin. There is an easier and faster way of approximating your company's savings by answering the question in our increased profit calculator. Here is an example of a company with 418 employees that has a projected annual savings of $351,138. You just need to supply us the number of employees that fall within the 4 categories of the profit calculator, and voila, you have your number. Call PTE, and we can do this over the phone in less than 5 minutes. While workers' compensation is not a part of the Payroll Tax Reduction Program, for many companies, it can generate corporate savings equal to 50% or more of your FICA savings, depending upon which state your workers work in. If you work in California, there will almost certainly be workers' comp savings for your W-2 employees. New York? Probably not. These are many states where Section 125 contributions are often treated favorably for workers' comp, which means premiums may be excluded from workers' comp calculations, thus allowing not only FICA savings, but workers' comp savings too. For some companies, unemployment insurance taxes is another area that can lead to additional corporate savings. If you pay unemployment insurance in Washington, Oregon, Hawaii, Alaska, New Jersey, or Minnesota, you will want to check on potential savings from your employees' lower taxable employee income. Even a small reduction in your wage base can translate into real savings. We've reached the end of our presentation and hope you will reach out to one of our principals to begin your corporate due diligence. David, Lou, and Larry are prepared to answer your questions and provide detailed explanations of the information provided today. Call or email one or all 3 of us today. Remember, each month you delay is a month of savings that you can never recover. With the Payroll Tax Reduction Plan, each payroll is an opportunity to save 7.65% of your payroll tax. Imagine you're a company with 7,000 employees and a potential savings of $7 million a year, and a chance to save nearly $600,000 a month. How long will you wait to call David, Lou, or Larry? We thank you for your time today and look forward to hearing from you soon.